So there's a lot of different ways to look at candles. And if you don't already know, this is what a candlestick chart looks like. The basics of reading a candle. Okay, so right here is a green candle. If it's a green candle, it means it opened at this price, went all the way down, went all the way up here to this top, and then closed at this price. Okay, so let's do another example if that one didn't make sense to you. Right here, we have a green candle. That means, how do we read that candle? That means we open at this price. At the bottom of the body is the open price. The bottom of the wick is the lowest range of that candle. The top of the wick is the highest range of that candle. And then the top of the candle body is where it closed. Boom. Let's go over another green candle. Okay, so this is where it opened. Went all the way down here to the bottom of this wick. Went all the way to the top of this wick. And then it closed right here. One more example. Okay, this green candle opened right here at the bottom of the body, bottom of the wick, went all the way to the top of this wick, and then closed here at the top of the body. That's how you read a green candle. And all it means is that the green candle says that the price went higher overall. If you want to see, or how do you read an orange or a red candle? All right, well, it's the opposite of the green candle. That means it closed. That basically is just telling you that price went lower. So that means we opened at the top of the body, went up, went all the way down to the bottom of this wick, and then closed at the bottom of the body. Okay, so let's go over another example. Okay, so let's read this orange candle. Opened at the top of the body, went all the way up here, went all the way down to the bottom of this wick, and then closed at the bottom of the body. Boom. Okay, let's read one more orange candle or red candle. We opened at the bottom. Alright, we opened at the top of the body, went all the way up, went all the way down to the bottom of this wick, and then closed at the bottom of this body. So that's how you read a candle. Alright, so that's the basics of reading candles. Overall, when you're reading candles and doing candlestick analysis, you want to always combine your candlestick analysis with multiple confluences and multiple tools. You never want to just base it off candlestick analysis alone. You always want to include other forms of analysis, like support and resistance, or like moving averages, or like Fibonacci or something like that, and multiple confluences and tools with the candlestick analysis to be sure that you are right and you have a higher probability of being right. Because the more confluences and tools that you combine, the greater the chance that you'll be right. But as with anything, nothing is 100%. So that's why you want to use multiple confluences to increase the probability that and the chances that you're going to be right. Okay, so that's basic candlestick analysis. So how would we interpret this chart based on what we have right here? Okay, so this candle right here tells us that there's a lot of selling pressure and a lot of people were selling, and the price went really, really low. It went so low that it got so oversold that it just shot back up. And that's why we have this huge wick. And so when you see a huge wick on a candle like this, a lot of the times it means that it's going to go in the opposite direction. So if you get an entire candle close like this, chances are after it closes, you're going to go in the opposite direction. And look what happened. It went all the way up here. All the sellers got sold out and shaken out, and then it reversed and the buyers came back in. And because there are no sellers and all the selling pressure got exhausted, it pushed all the way up here, because at this point, when this was over, that means all the buyers came in, because there are no sellers, there's a lot of pressure going higher and a lot of buying pressure. And so look what happened. Boom, went higher. Look at all these green candles. Huge green candle. Not as big of a wick as this, which means there are a lot of buyers and all the sellers are basically gone. We get a candle body look how big the wick is, and look how much the body kind of like looks like it's shooting higher. And you can tell that the wick is big and the body is higher, and look how small the top wick is. That's telling us that there's still a lot of buying pressure. Boom, we went all the way up here, and then look, okay, so went all the way up here. Now look at this. Look at all these wicks. Look at all these wicks, consecutive wicks right after each other. What does that tell us? There's all the buyers are getting exhausted. A lot of the buyers are disappearing, and now we get a lot of selling pressure, and that's why we have a lot of these big wicks right here, right after one another. So what does that tell us? Chances are, if you see all these wicks right after each other, chances are it's going to reverse. But that's just based on the candlestick analysis. All right. And then on top of that, you got a big ass orange or red candle engulfing a really small green candle with a huge wick. So what does this candle right here tell us? That there's a lot of selling pressure. The buyers are getting really weak. Look how small the body is. And then boom, look at this huge sell-off candle engulf this entire body. It was probably like 6-7 times the size of this green candlestick body, and just sold off. Boom, boom, boom. Look at all this selling. All right. Look at over here. Look at this wick. What does this tell us? It's kind of similar to the opposite. It's kind of similar to the opposite of this. Look at the wicks. Look at the size of the wicks and look at the size of the body. So when you're doing candlestick analysis, you just want to compare the sizes of the wicks, the sizes of the bodies, and the color of the candle to tell you and give you an idea of the projection of what might happen to the price based on the candlestick. And that can give you a clue. It will never give you the answer, but it will give you a clue to what could happen next. So look at this candle. Huge ass wick, small body. That means the sellers are giving out. There's a lot less selling pressure. Boom. A lot of buying pressure on the green candle, and it just went all the way higher. All right. Now let's go on a smaller time frame, a weekly time frame. All right. So look at what happened here. Huge engulfing green candle, huge wicks to the downside, which means a lot of the sellers are getting exhausted and the buyers are taking over. Boom, wick, huge wick, huge wick. Look at this huge ass body. Boom. And then some consolidation a little bit and a huge wick, huge wick. So when you're reading candlesticks, that's really what it comes down to. It comes down to the size of the wicks, the size of the bodies. Are the bodies engulfing the previous candlestick bodies? Are they not? Are they small? Are they big? What color is the candle? Is it telling us that there's more selling pressure than buying pressure? Like, that's how you read the candlesticks. And what matters is the general overview more than you want to keep all the details in mind, but then you always want to look at every single detail and then step back and look at it as a whole. You never want to just use one small thing because that's not enough data to tell you and give you a good idea of what's going to happen. And then on top of that, and that's just the candlestick analysis, right? On top of that, you want to combine that with moving averages and all this other stuff. So that's how you do candlestick analysis in depth, and the basics of it, how to read the candlesticks, and also just tips on how to combine your candlestick analysis with other analysis, and how to compare the candles and how they read and lead into another and create a pattern that you can kind of interpret and use to read price action and predict and forecast future prices.